A very good morning, one and all. Today we meet in yet another interesting presentation to exactly what's happening across the world in terms of OPEC and its recent measures against the COVID-19 impact. I would like to give credits for this research to Mr. Anand and CA Jugal Gala. Certain legends used in this presentation is DOC, Declaration of Cooperation, GDP, Gross Domestic Product. OPEC stands for Organization of Petroleum Exporting Countries, and PSU are public sector countries. The schema flows from an introduction to the countries in OPEC Plus, proposal to cut the production, and how they reached consensus, and what are the consensus as its conclusion. To have a look at an industry overview for the oil sector in India, the oil and gas sector is one of the most core industries in India, playing a major role in influencing decision making for all other important sections of the economy. It is also high in providing job opportunities, and India's economic growth is closely related to energy demand. Therefore, the need for oil and gas is projected to grow more, thereby making the sector quite conducive for investment. But scenes have changed after the COVID-19 when the impact in the oil requirements for various countries in the world have changed significantly, along with the prices that have taken a toll, which also impacts many oil producing countries. So, to have a look at the industry, COVID 19 is an unseen beast that seems to be impacting everything in its path. So, there has been no sector of the economy unaffected by this unprecedented situation. Of course, for the oil market, it has completely disoriented market supplies and demand fundamentals. Though we are getting to know that the oil requirement imbalance is close to about 15 million barrels per day, but by the end of the year, it could reach to 30 million barrels per day. OPEC Secretariat assessment of available global oil shortage capacity stands over 1 billion barrels. The expected 2020 global GDP was reduced from 2.4% in March to 1.1 minus 1.1% in April. This global contraction is far greater than that was for Great Recession of 2008 and 9. So things look a bit gloomy, but let's hope that the recovery is in the form of V shape and not an L shape. So a brief listing of the countries which are under the OPEC Plus agreement. So it's Algeria, Nigeria, Kazakhstan, Angola, Qatar, Malaysia, Ecuador, Saudi Arabia, Mexico, Gabon, UAE, Oman, Iran, Venezuela, Russian Federation, Iraq, Azerbaijan, South Sudan, Kuwait, Bahrain, Sudan, Libya, and Brunei Darussalam. So the proposal to cut production after getting pressure from the oversupply in the market and lower demand, an extraordinary general meeting was held on the 10th of April 2020. The OPEC put forward a proposal to OPEC Plus countries in the presence of the shareholders to adjust downward their crude oil production in a staggered manner over the three phases. From 1st March 2020 to 30th June 2020, the total production cut to 10 million barrels per day. 1st July 2020 to 31st December for the rest of the year, 8 million barrels per day as a cut. And the following year from 2021 Jan to April 2022 for 18 months period, 6 million barrels per day. But the baseline for calculation of the adjustment in the oil production of October 2018, except for the Kingdom of Saudi Arabia and the Russian Federation, which is at 11 million barrels per day at this point in time, before the production cut. The agreement will be valid until 30th of April 2020. However, the extension of this agreement will be reviewed during December 2021. The above was agreed by all the OPEC Plus countries because their interest lied on the prices of oil to be pushing up, because it's fallen down from $68 in the beginning of the year to just below $30 for Brent crude at $28 as of now as we speak. And the West Texas has further fallen down to a lowest level which was earlier indicated in 2002. That's about 20 years back at $18 per barrel. So all the other countries of OPEC agreed except for Mexico, and the result, the agreement is conditional on the consent of Mexico, and hence this was still not clear as on end of 10th April 2020. Then came 20 12th April 2020, when they were reaching a consensus on their 10th extraordinary general meeting, all the OPEC countries agreed to adjust downwards their crude oil production with the intervention of US President. After discussion with the Mexican president, they agreed that the quota which Mexico was to reduce in production will be shared between the two countries. And hence, with a marginal change of from the ninth extraordinary general meeting or the 10th meeting, they've agreed at 9.7 million barrels per day in the first next 3 months, and from July to December at 7.7 million barrels per day, and the rest of 2021 and the first quarter of 2022 at 5.8 million barrels per day was cut. The meetings reaffirmed and extended the mandate of the Joint Ministerial Monitoring Committee and its membership to closely review general market conditions, oil production level, and the level of conformity with the DOC. The meeting called upon all major producers to provide commensurate and timely contribution to the effort aimed at stabilizing the oil market, and the president's participants agreed to meet on the 10th of June 2020 via video conferencing to determine further action as needed to balance the market. And as we speak, yesterday, the Ministry of Oil from Saudi and Russia has informed that if a meeting is required earlier than that, then that might be done to further review production cuts. Because despite the 10 million barrels per day, which is close to about 10% of the daily global production cut, the oil prices further slid down by 15 to 18% because the market did not feel that the cut was enough to overcome the over 15 to 20 million barrels per day excess supply in the market. So despite the attention given to the OPEC deal, the most profound problem remains the crashing global oil demand due to the economic impacts of the coronavirus. As we can see, China, for the very first time after 1960s, they have economy for quarter one shrunk by close to 7%. Ultimately, the size of the demand shock is simply too large for a coordinated supply cut, because that's not going to allow the oil producing countries to sustain their budgets at all, though at these prices and this cut they're already going to be in deficit. The oversupply would add a further 1.3 billion barrels to the global crude oil stock and hence exhaust the available global crude oil storage capacity within the month of May 2020. And that's when the countries are going to meet again in June to discuss further streamlined and stricter oil production cut. So as we speak, the West Texas crude is trading at $18, which is the lowest in the last 20 years. And the Brent crude is trading at just below $30 at $28.50. And that is also considered as one of the lowest in many years. Let's wait and watch for the next two meetings to happen. And then we can probably have a quick presentation on an update on the OPEC deal. Thank you so much for listening to this presentation. We look forward to meeting for yet another interesting presentation.